That's what the technical expert says. But let's get Harendra Kumar of Elara Capital and Hemant Tukral of Aditya Birla Money, who also join in to give us their views. Gentlemen, morning to both of you. Harendra, I want to come to you first. Last week was quite poor for the markets. In fact, we lost about almost 4% on the index. Do you think there is more weakness in store?
Yeah, absolutely. If you look at the macro, the negatives are clearly outweigh the positives. So the earnings season is out, and the outlook for at least the next 6 months is actually very, very benign. And on the global front, you are seeing that yields are spiking up, volatility is up, and all emerging market currencies are weakening. So clearly there's not much to look forward in terms of environment, quote unquote. And you are seeing some amount of outflows as well. So guess is that, don't fall a catching knife. The market should settle lower by another 5-7%, if not more from there on. So I think that's at a good level where one should start re-looking at the Indian markets, and when valuations are in a comfortable zone. So clearly we're looking at 3 to 4 months of downward drift to the market now.
Oh, falling knife is putting it rather strongly, isn't it, Harendra?
1050 level could hold. Harendra, talking about individual stocks, the two heavyweights that have been under intense pressure in the last couple of months have been ICICI Bank and Tata Motors. Would you buy any of these names at this point, or do you think there are further downsides in store?
I would say that the downside is still there. If you look at the Bankex, I think it's looking extremely vulnerable. So nobody wants to fish on the PSU waters. And in the private banks, I think HDFC Bank, Axis are looking relatively stronger than ICICI Bank. In the recent quarterly numbers, if you look at it, the stress in ICICI Bank's asset actually was slightly higher than what people anticipated. And the balance sheet growth has actually kind of just halted. Given that the ROEs are not showing enough traction at this given point of time, and the multiples are that of a private bank, I think the interim for ICICI Bank is not as much rosy as it is for, say, probably a Kotak, Axis, or an HDFC Bank. So my guess is among the private bank, ICICI Bank would be slightly weaker. Coming to Tata Motors, if you look at the whole four-wheeler, two-wheeler pack, Tata Motors was the beneficiary of a global rally. But currently now that's becoming his Achilles heel, and outlook on that front with the China exposure is not too good. Contrary to that, you have a Maruti which has twin tailwinds that are working for it. The volume numbers have come back, plus you are seeing the yen weakening progressively. So I think the market knows clearly where the strength areas are. So if you ask me with respect to both these stocks, I think this is not the moment to go out and cherry picking in these two stocks at the moment.
Fair enough. Maruti is certainly one place where you can expect outperformance, a place to hide. Is there any other, Harendra, would you expect more bounce in Coal India? That was the standout performer last week.
Yeah, I think, Lata, we've been speaking about Coal India. I think the government intention in terms of one is raising output is very, very clear. That has been demonstrated, and progressively, they are moving in that direction. Number two is, the announcement that, all the other linkage coal will also go in for auction is an incremental positive. So the market will actually, increase the valuations progressively with the higher visibility. So the target prices are actually being, nudged upwards. Plus, of course, the government would want to go out and do a disinvestment at higher price point. So I think structurally, Coal India, fuel for all, electricity for all, and disinvestment mean that the stocks going to remain extremely robust from here on.
Okay. ICICI Bank only.
Okay, so those are the levels to watch on the Bank Nifty. Harendra, it was a pretty disastrous turn of events for Nestle that we saw last week. But post the Maggi fiasco, how do you approach the stock as an investor? Would you be having a contrarian positive view, or is this a stock that you should completely stay away from?
No, I don't think so, because Nestle is a very old brand in India, plus Maggi has been here for 3 decades. So it's more of a staple that at this given point of time. So if you ask me how would a management respond, I think you'll have to give it 6 to 8 months before this whole controversy is blown away, and the business is as usual. So around that point of time, I think the valuations would have settled lower. The company would have been off radar of investors, and I think then the stock will start to re-rate once again. So yes, for the short-term traders, this is not a very comfortable environment, but for long-term investors, I'm sure they're looking at the right price to enter. I think another 5-7% lower, I'm sure value investors will start looking at the stock once again.